how's it going, guys? I'm Christopher McGee. I'm the owner of Halcyon Real Estate. This is just a simple quick tutorial of what all the numbers mean that I go over in my weekly numbers videos. So we're just gonna jump right in. I'm gonna start at the top, talk about inventory, and go all the way down to canceled, expired, and withdrawns in the order that I always present the numbers from week to week in those numbers videos. So let's jump right in, talk about inventory first. Okay, so if inventory is down, it is in the seller's favor. If you're a seller, you have a home to sell, and if a buyer is thinking about making an offer on your home, you know that they have fewer options to look at to make offers on. There's just fewer options that will work for them as a buyer. So you as the seller know that if they are interested enough to make an offer, then they probably don't want to make an offer that's not good enough and get rejected and have to go back again to looking for another house to buy. And as the seller, when inventory is down, when there's fewer homes for buyers to look at, there's a higher likelihood that you are in a situation to receive multiple offers as the seller. So if this number is up, if inventory is going up, if it's up relative to where it's been, then we know that the buyers are getting more options. And a buyer would have more negotiating power with you as a seller because your home isn't such a hot commodity anymore. It might be a great home, but if there's 20 other homes like it within a mile radius, they're not as worried about losing out on yours. So inventory is just a classic example of supply and demand. If inventory goes up, supply. If supply goes up, then demand will come down. And obviously vice versa. If supply goes down, then demand will go up. Okay, average days on market. Average days on market gives us an idea of how long homes are on the market in general before they get offers that they accept. And if this number is going down, then if you're the seller, you kind of get to hang it over the buyer's head that if they don't make a decision quickly about whether or not they want to make an offer on your home, when they come back to check it out in a few days or a week or a few weeks from now, your home might not be an option anymore. You might have already accepted another offer. Okay, so if you're a buyer and you find a house that you think you like well enough to make an offer on, and the average time on market right now is 90 days, and this house has only been on the market for a week, you have a pretty good chance that if you want to go look at a bunch more houses to make sure that this is just the right one for you for the next week or two, and then come back and make a final decision on this one, the average time on market is 90 days right now. This has only been on the market for a week. You're pretty safe, relatively speaking, that this home will still be here available when you come back to make a final decision in a week or two. Average days on market goes up, it's better for the buyer. But if average days on market is 10 days and this house has been on the market for a week, if you want to go out and look at a bunch of other houses for a week and then come back and make a final decision on this house that you think you're willing to put an offer on, chances are it won't be here anymore. So as average days on market goes down, it gets more in the seller's favor, and as it goes more up, that's more in the buyer's favor. Average list price versus average sold price. We're looking at the difference between these two numbers, and every week when I'm going over the numbers, I look at what the average price was for all the homes that are listed on the MLS Active right now. What was the average price asking, and what was the average price that actually got recorded as when the house was sold? So when this number goes below zero, when it's selling for less than what they were asking for, this obviously suggests that buyers have had, on average, more negotiating power. So if the difference between average lists and average sold is in the negative, if it's below zero, then the numbers are telling the story that the market has been in the buyer's favor in recent history, but this number has a tendency to lag. If in the first quarter of the year, January through March, we were looking at a relative buyer's market, then in the second quarter, we will still see that this number is below zero usually. And it'll lag a little bit, it'll lag several weeks, maybe several months before we see that on average, now homes are selling for more than they had originally asked for, which would be in the seller's favor during a seller's market. Okay, number of homes sold in the prior week. The critical thing when we're looking at this number isn't so much whether or not it's up or down from its own measurement in the weeks before. It's really whether it's up or down relative to our inventory and how quickly inventory is going up or down. If homes are being sold slower than inventory is rising, then inventory will continue to get to go up, and that tells us that for whatever reason, people aren't buying homes as quickly as they are going up for sale. And so inventory rises. That story is telling us that homes are staying on the market longer, inventory is rising, and buyers have increased negotiating power. If this number is going up, then more homes are being sold. And if this number is going up relative to the pace at which inventory is going up, then it means that homes are being sold faster than homes are being put on the market for sale. And that means that inventory will diminish. That puts that downward pressure on inventory that pushes more in the seller's favor. Inventory goes down, that's a variable in the seller's favor. Okay, number of homes currently under contract. So the number of homes currently under contract is really a predictor of how many homes we should expect to be sold in the coming weeks. And that's really that. So if this number is down relative to what it was in the weeks before, then we would expect that fewer homes are being sold. And what that means for whether it's in favor of sellers or buyers is again an issue of whether or not homes are going under contract and therefore selling at a rate faster than they are being added to the inventory. Okay, the number of price reductions in the prior week. When the number of price reductions is going down, that's in the seller's favor. If the number of price reductions are going down, that tells us that fewer sellers are needing to drop their price before they get a buyer under contract with them. So obviously we're seeing the buyers are getting asking price right off the bat. So if we compare this to the rest of the numbers on the chart, when price reductions are coming down, this is a variable in the seller's favor, and we're probably seeing inventory come down, and we're probably seeing the average days on market come down. We're probably seeing the difference between average list price and average sold price above zero, and we're probably seeing an increased amount of properties sold and properties going under contract. So if we flip that around and if we're seeing more price reductions per week, we're probably seeing that homes are staying on the market longer. That means that inventory is rising and there's probably fewer things sold, certainly fewer things sold per week than are being added to inventory per week. And so that just kind of helps tell the story of the fact that things are going in the buyer's favor. When there are more price reductions per week, things are looking to be more in the buyer's favor. When there are less price reductions per week, things are definitely pushing in favor of the sellers. Okay, and lastly, the number of canceled, expired, and withdrawn listings from the MLS per week. So quickly, if a listing contract is canceled, it means that the seller canceled the contract that they had with the agent that they had chosen to represent them in selling their home. If a listing contract expires, it is to say that, so in the first paragraphs of a listing contract with your listing agent is the term of the listing, and it's 3 months. I'm gonna represent you for 3 months, or I'm gonna represent you for 6 months, or I'm gonna represent you for a year. I'm gonna represent you till the end of this year. It depends on what your goals are and what the market looks like and what we think is wise for what your needs are as the seller. Well, when that term ends, the listing is expired and it no longer shows as an active property on the market. And if a listing is withdrawn from the MLS, it's just a decision that the seller made that they didn't want to sell their home anymore. Or they took it off the MLS because they're gonna change some of the information about it and put it back on the MLS so that things don't look weird about the way that they change the information. These three things are grouped together because if this number is going up, if the number of listing contracts that have been canceled, expired, or withdrawn from the MLS, if this number is going up, it means that sellers are losing confidence that they will get what they want out of their attempt to sell their house. And if this number is down, then it's saying that sellers are gaining confidence that they'll be able to get what they want in the process of selling their house. Okay, so that's all the numbers that we go over from week to week. Here's what's really important to understand is that all of these numbers are variables, and no one of these numbers, no one of these variables can tell the story all by itself. Some of these variables are stronger, more powerful indicators of what's going on than others, but like I've described, some of them kind of lag, some of them tell a story of what's happening. You have to compare some to others in order to get a real story. And so they're all variables, and it's in looking at all of them relative to each other that we get the full story of what's going on. In a clear seller's market, all of these variables are stacked in the seller's favor. And in a clear buyer's market, all of these variables are stacked in the buyer's favor. Now, in recent history from when I'm making this video, we have a great example for both of those scenarios. In the year 2021 in Utah, during the pandemic, this was such a hot seller's market. And at the end of the year 2021, on average, homes in Utah gained almost a full third of their value. So if you had at a 300K house at the beginning of 2021, then at the end of 2021, your house was close to 400K. Another third again on top of the value of your house. It was insane. I mean, if you're a homeowner, you hope that your home is gaining value over time, but like 6 to 10% every year is very comfortable and normal in Utah, but that was an insane year. So in 2021, inventory was stupid low. It was like 1,500 to 2,000 homes on market. The average days on market was like 6 days. Average sold price was consistently higher than the average list price. The numbers sold in the prior week and the number going under the number currently under contract were both high, and they were certainly higher. That was certainly outpacing consistently the inventory, which kept downward pressure on inventory, and it kept going down. Price reductions in the year 2021, dude, if you were a listing agent and you put a home on the market and then reduced its price, everybody else was looking at you like amateur hour. Like, there was no reason to drop a price unless you just accidentally added a zero when you first put it up on the MLS. There were virtually no price reductions throughout the year 2021. Canceled and expired and withdrawn listings from the MLS was virtually nil. That was obviously unsustainable, and Utah was a microcosm of what was happening all across the nation. And so the Fed started increasing the rates of interest. And with the interest rate hikes that happened beginning in January of 2022, starting in March of 2022, the downward shift to being a buyer's market got real. Interest rates came up, and all this meant that inventory started shooting up. We shot from 1,500 to 10,500 by October of 2022. Average days on market shot up. It got up into the 70s. Difference between average list price and average sold price dipped sharply below zero. The number sold and the number under contract was going low, and it was obviously going lower. It was happening at a slower pace than the rate at which inventory was rising. Price reductions were sky high. There were 1,700 price reductions at any given week, as opposed to like next to none at any given week during the previous year. And canceled and expired and withdrawn listings were happening a lot more. So those are two examples of when everything stacked in the seller's favor one year, and then because everything was out of control in that direction, the next year, with the Fed's hike of interest rates and their steady, consistent hiking of interest rates over time, everything shifted down into being more towards the buyer's market. Okay guys, thanks for watching. I hope that helps. If you want to stay educated on what's going on in Utah's real estate market, just hit that subscribe on the top left of the screen. I'll see you in the next video, and of course, if you or anybody you know is thinking of moving in or within Utah in the coming months, please feel free to reach out to me in the comments here or on my cell, 801-834-9713. You guys have a good one, and I'll talk to you in the next video.